It's weird that it doesn't feel, remember the feeling in November when we were pumping, we went from 82 to 95 or so in that week. And now we're here and there's not a lot of bullish sentiment. We've been here before, but this is a big week. We were at 85K in last week's show. We've gone up 10K since then. What's your take on this price action? How do you guys feel about it?
I think what's so notable real quick is you can't talk about this movement without comparing it to the S&P and to other assets. I think what is so notable here, so year to date, look at this, guys. We got Bitcoin up 1.3% year to date. The S&P down over 6%. And this is during one of the biggest just kind of financial shocks. There was one point where the S&P was down 10% while Bitcoin was flat year to date. And so I think what's so notable is just this divergence, and just like you literally were better off in January plowing all your money into Bitcoin than the S&P 500, even though we went through a huge financial shock. And even that S&P number obscures it, because you look at something like Amazon stock a couple days ago or whatever, Bitcoin was green for the year. It was down 20%. It's a little higher now, but remarkable.
And you have November, you have the election of Trump. Everyone's super excited, bullish. That narrative is fantastic. And then
making all-time highs.
Yeah. And you have right now Bitcoin coming back, and I think surprising some people. But I think the other part of it is there's two dichotomies. And there's this, I saw stuff this morning, huge Lou Groman fan, but he's saying it reminds him of 2008. And you have other people saying there's no recession. Look at this, look at liquidity, look at all these other things. And so I feel like there's just kind of two worlds and two polar opposites of where we are. And I think that's a little bit why maybe people are a little offsides on, is this move for real? And is Bitcoin really decoupling? I know when I was on previously, I was trying to stay away from the D word. And I feel like it's really hard when you have people like a talking head like Josh Brown on CNBC, who is not a pro Bitcoin guy, saying Bitcoin is decoupling. You see that and you're like, interesting. I'm going to start noticing that stuff. And there's more and more folks that are not pro Bitcoin talking about decoupling.
I think part of why it doesn't feel as euphoric is the first time you're approaching 100K and crossing it, that obviously is different than the next time you get back to it. And there was just so much bullishness, especially in late January. You remember the day one SBR anticipation, and we did get something there. But I think a lot of people thought that was like going to propel us to new highs. It turned out that kind of was the high. So I think some people feel a little bit let down by that. That's why being back at 95 probably doesn't feel as great. And then I think Isaiah nailed it. There's still a lot of uncertainty with like our tariffs coming back, our trade wars coming back. Isaiah, I saw exactly what you did with Groman talking about 2008. I think it started with a Bob Elliott tweet when he said this feels like 2008. And he had to clarify it because he doesn't really mean like global financial crisis 2008. But what I saw him clarify was that he feels like nothing's really been resolved in the last week or two that we've had a rally. So he didn't say bear market rally, but in my opinion, he's calling this a bear market rally. And I think anyone has to ask themselves this question: is this just a rally within a broader market that still has a ton of concerns? Or was there like a serious pivot? Did we pass max tariff pain? I will give Steven credit on the show last Friday. Steven, you can correct me if this is wrong, but I'm pretty sure you said something to the effect of Trump basically pivoted at least away from the initial really strong strategy of I'm going to be super tough on trade. And it was just Friday when Steven said like there was a pivot to some extent. And then literally just a couple of days later, we started this rally. So what's your take, Steven? Do you think there was like a meaningful pivot that we're past the point of max trade war pain, or do you think this could potentially be a bear market rally?
So there's two things here. Let's be clear. We've got asset markets and we've got Bitcoin. Bitcoin, I think, is trading under its own winds currently with a lot of the stuff that is going on. I think it actually is really exciting. I think what TradFi has realized is like either risk assets recover and Bitcoin goes up, or there's this breakdown in the dollar system and Bitcoin goes up. And I think that's part of the trade, coupled with some large new entrants in the space. So we'll talk about Bitcoin and traditional assets a little separately. However, no, I mean, I've been public since early mid-April that I think the bottom is in. I think that's what you were talking about, but I was public saying the moment once Besant flew down to Mar-a-Lago and Trump rolled Besant in as opposed to Lutnick, that was the pivot. That was the pivot. And you've seen it just incrementally since. Now, does that mean that they are done trying to reorder global monetary trade, etc.? No, I don't think they are. But I think they hit a point of maximum pain that is hard to push past. Could I be proven wrong? Could there be some sort of second wave of this? It's possible, but I really saw that as a notable change. And it came at a moment where we were at COVID level crash levels. I think that NASDAQ was down in excess of 30%. It's a perfectly fine place to have a bottom. And my reasoning, and this is why I was confident saying, hey, I think the bottom's in, was that the sentiment, I think every drawdown can effectively be reduced to a narrative, like a belief, like a sentence. And I think the belief that took us down was that Trump is unwilling to make deals. These tariffs are actually relatively permanent, and he's not going to be swayed from these rates. And what put in the bottom then is I think the market realized that wasn't true. There were deals. Therefore, we shouldn't be that low. It wasn't justified. And I don't think there's much that can happen now to refute that, because it's very clear they are going to make deals, and these aren't final sticking points for the tariffs. Yeah.
The turning point then was, I think the bottom, the max kind of fear, anxiety in the market was Trump holding up the cards in the Oval Office with all the tariffs listed out. And then the pivot, there was a week of pain, and then the pivot to, okay, 10% for everyone. We're going to deal with China separately. That was the turnaround. That was a fundamental change in the kind of rhetoric that was coming out of the White House.
100%. It was like an overnight panic.
Yeah.
And that's what it was. That's what it was. So I do think we're past that. And I think there's opportunity for people, because I think the market's still in shock. I think the market's still in shock.
Let's flip back to some price charts. We have a few to share here, and we can dig into this price action that I know Bitcoiners are enjoying right now. Let's take a look here at, this is from a couple of them from Turdemeester, who is one of our favorite analysts out there. And he says that this is one of the only macro charts that matters. And it's Bitcoin expressed in gold. And you can see the different levels here going up exponentially from 1 ounce to 100 grams to 1 kilogram. And it looks like Bitcoin has broken out from each of those levels from gold over the years through the cycle, and right now has tapped a few times on the top of the 1 kilogram level, right? And so if history is true here, and we believe that Bitcoin is the faster horse, then you'd see Bitcoin break through this 1 kilogram level as well at some point. Interesting chart. What do you guys make of this one?
I think you got to shout out gold here for sure. I think it's outperforming Bitcoin year to date. Also, there was someone posted it to Twitter definitely on a 3-year time horizon, gold is outperforming the S&P, and on a 20-year time horizon, gold is outperforming the S&P. It's like pretty astonishing when you think about it. This is like all the factors that have led to US equity markets being so dominant. When you think about the fact that US equity markets have outperformed like any other geographical equity market, and then gold is still outperforming that on a 20-year time frame, it's like really astonishing. Obviously, the read through for the four of us and people listening to this are that everything that's good for gold is good for Bitcoin, and it's going to be even better for Bitcoin. We think that's conceptually true, and it's historically true also. Most of the time that gold has a big run up in price, it tends to lead Bitcoin. So that's what most of us are expecting. Maybe that is a little bit of what has played out in the last few days here, is that gold was rather stable this week, whereas Bitcoin caught up to it. So I think we also have a chart that shows performance of different asset classes since April 2nd, which was the tariff announcement Liberation Day. And you can see it's really gold and Bitcoin that are positive, and not much else is positive there.
Absolutely.
And I would just say, going back to the S&P and gold piece, to me, I find that fascinating, because I came from the traditional world of like financial advisors that hated on gold, and that it's this barbarous relic, doesn't do anything, no cash flows, yada, yada, yada. And then you see the return of gold doing so well. It's just like, how do you sit there and not pay attention to that? And again, Bitcoin, the charts, Bitcoin priced in gold, to me does, to Tur's point, it takes out so much of the noise and so much of the fakeness of quantitative easing and all these other things. And so you can see like this like gradual and then suddenly move of Bitcoin over time. And I think, yes, the big move in Bitcoin for this cycle, if there is cycles, and we can have a fun conversation on that, is still out in front of it.
Absolutely. I agree. I think it hasn't happened yet. And I'm not agreeing with the cycle view, but I just agree that there's a lot of room left before the top.
Let's talk about price cycles. Here's a good chart. And again, from Tur. A lot of people do post this chart, which just overlays Bitcoin halving cycles, the price during Bitcoin halving cycles on top of one another. And this cycle is showing that taking way more time to appreciate than it did in previous cycles, and is being pointed to by a lot of people as a bearish chart Tur says it's not bearish. He's saying that this cycle, for the first time, the buying is starting not from retail, but from slow moving institutions. And once retail catches on, Bitcoin can cut through the other halving precedents like a knife through butter. Great take. But the larger maybe conversation here is, are we post cycle? Are we post halving cycle at this point in Bitcoin?
So I loved her. Fantastic writer, author, friend. But I do disagree with that chart a little bit, for no other reason than we hit an all-time high before the halving. And that's not shown on that chart. So of course it looks like that.
Yeah.
We've never hit an all-time high before the halving, which is itself evidence of change in the market.
It's this run up here to the right side. You can see the all-time high previous to the halving in that bottom full cycle. And you can see it run up, and it's not counted for this cycle because it was
correct. That would look completely different. So I think I just think the data view doesn't fully present that. And I think Bitcoin's performance has been fine. It's been good. And if anything, I wouldn't attribute it slow to like institutional players, but actually just the NASDAQ falling 30% in 3 weeks.
Yeah.
I knew whoever answered first was going to jump on that because I was like, oh, good answer. It's the ETF, all-time high before. You don't see it. But yeah, liquidity drives markets. And I think liquidity is going to continue to drive Bitcoin. The halving is less and less impactful. I do think there can still be cycles. It might just not be tied to a 4-year cycle the same way.
Yeah, keep going. Let's get into that. Are we going to see 4-year cycles anymore? I'll give my take, but I'd love to hear yours.
I think it's really hard to say there's not cycles, right? And I remember there was a tweet, I think it was Michael, or was it Mitchell from Blockware, had made a comment about like drawdowns are a thing of the past, all this other stuff. I was like, I'll take the other side of that, right? Sure. Because there's going to be a ton of volatility. And there was a really good stat from Darius Dale on a podcast with Pomp talking about like the S&P over the last decade has had intra-year moves of 20%. And so like when you see fourth turnings, heightened volatility, and I replied with that and ran with it. And it reminds me of that like Weimar Germany gold craziness, right? It goes up, but if you measure it with the volatility, it gets wild. So volatility is here to stay, and it will be a bigger and bigger part of this. But I don't know if it's going to be this nice little cute 4-year cycle that people think they can trade, because that's always been my thing. Talking to clients day in and day out, when people are like, I'm just going to trade this cycle because it's going to look like this. I'm like, how do you know that? You don't know that. You might be able to, and that would be great, but I just don't know if that's going to be the case. And to think that the cycle is going to play out the same way, it's a different market, and there's a lot of other things happening.
Yeah.
Couldn't agree more. And you have really good nuance there. Saying I'm skeptical of the cycle does not mean there's not going to be a drawdown. Of course, there will be drawdowns. Of course, there will be volatility. I just don't think it's going to take 4 years and it's going to be 80% from top to bottom. I think maybe you have a run up and then a 40% drawdown, and then sideways, and then another run up, and then a 30% drawdown, and just like a market. In fact, that's how Bitcoin has traded for the last 2 years. It has a big run up. It trades sideways for 6+ months, and then it runs up again. In fact, that's been the market structure.
I think 35% has been the max drawdown in the past couple of years. So the question is, are we post halving cycle, right? Halving driven cycles, which we've had 3 of pretty clearly. They all look similar to one another. And the implication there is the primary driver is a decrease in the Bitcoin emission schedule, right? So we go from 50 to 25 to 12.5. And we're at a point now where 99 almost % of Bitcoin has been issued. The impact of the decrease in the emission rate is just basically gone at this point. It was negligible in the last halving as well. Still somewhat there, but now it's basically nothing relative to the established supply. And so I don't think that having induced cycle will happen anymore for that reason, but also because Bitcoin's just maturing, and we have an actual mature marketplace now. And so it's trading like a mature asset or a maturing asset. And with lots of big players in the space, I would think it will trade more like gold does, which doesn't see these parabolic swings and then 85% floor dropping out of price.
I think that's right. And it makes sense that the miners' behavior and the actual event of the halving would have had more impact in the past, for all the reasons that Brady just outlined. Plus, if you just think about it, there weren't these like massive buyers of Bitcoin. The miners, once they started selling because they were like, oh crap, price is turning the wrong direction, we got too optimistic, we have to sell some Bitcoin. You're talking about like some of the biggest holders of Bitcoin selling their Bitcoin. So that created the cycle. This time, that's not really those aren't the big holders of Bitcoin that we're seeing. MicroStrategy doesn't sell their Bitcoin because there's a sell-off. Long-term holders, individuals, don't sell their Bitcoin because there's a sell-off. Miners had to do that. So it's just different. I think going forward, Bitcoin, there will be cycles. They won't be halving cycles. They will be much more macro cycles based on fiscal policy, monetary policy, trade wars, all this kind of stuff.
I got to correct the record real quick. I said 99%. It's 94.5%. About 95% of Bitcoin has been issued. The 99% number that was stuck in my head was Saylor in 2035, saying at that point, 99% is issued and basically the rest is noise in terms of decreasing scarcity of emissions. So anyway, just wanted to correct that. 95%.
Sure.
I love these liquidity charts because this is a nice fundamental driver of price that you can look at because it's the state of the economy, how much money and liquidities exists in the world. And you can see here these green ovals over the corresponding run-ups in Bitcoin price and increases in M2 liquidity. And they follow each other very closely, right? And so you've seen a big spike in liquidity happening for the past few months. And so now we're starting to see maybe Bitcoin responding in part, at least, to those conditions. So another one to watch is if you don't want to do technical analysis on charts, you want to look at fundamental driving factors. I love this chart. BTC in DC this September 30th, October 1st at the Kennedy Center, the historic Kennedy Center in Washington, DC. This is put on by the George Washington University Policy Institute and BTC Prague and ourselves, Swan. So we're really looking forward to this. Check it out at btcindc.com.